What if I told you one single number controls your mortgage, your investments, and even the entire economy? When this number goes up, stocks can fall, housing slows down, and businesses start cutting back. When it goes down, markets surge, borrowing explodes, and growth returns. That number is interest rates. And once you understand how it works, you start to see the entire financial system differently. Here's the problem. You hear about rate hikes, rate cuts, maybe even terms like hawkish or dovish, but no one really explains why markets react so strongly, why a small 0.25% change can move trillions of dollars. So most people are left reacting to headlines instead of understanding what's actually driving the market. Let's break it down simply. Interest rates are the cost of borrowing money. When rates are low, it's cheap to borrow, so people take more loans, businesses invest more, and the economy grows faster. But when rates go up, borrowing becomes expensive. Suddenly, people stop buying houses, companies delay expansion, and spending slows down. So right away, you can see that interest rates directly affect economic activity. Now let's connect this to stocks. When you buy a stock, you're really buying future profits. But those future profits aren't worth the same as money today. They need to be adjusted using interest rates. When rates are low, future earnings are worth more today, so stock prices go up. But when rates rise, those same future earnings are worth less, so stock prices fall. This is why markets react so strongly to interest rate changes. Now here's where everything connects. Interest rates don't just affect one thing. They trigger a chain reaction. Rates go up, borrowing slows, spending drops. Spending drops, growth slows, markets react. So when central banks change rates, they're not just adjusting a number, they're influencing the entire economy. We've seen this play out again and again. When central banks aggressively raise rates, markets struggle. Growth stocks fall, housing slows, liquidity tightens. But when rates are cut, markets often rally because money becomes cheaper again. So here's the key takeaway. Interest rates are not just a number. They are the foundation of how money moves through the system. They determine how much people borrow, how much businesses invest, and how markets are valued. Once you understand that, you stop reacting to headlines and start understanding what's really driving everything. Because in finance, the people who understand the system are the ones who stay ahead of it.